We'll get you technical perspective from Sandeep Bagle. Also bring on board Neeraj Diwan, Director at Quantum Securities. Okay, let's bring on board Sunil Garg from JP Morgan. Sunil, hi, evening. As an outsider, how bad is India looking to you right now?
You know, the fundamentals have been looking pretty challenging for a while. And I think if you look at the headline indices, they actually seem to have held up very well. I think the big sort of derating we've seen in some of the smaller and mid caps clearly, not reflected in the, headline indices such as the Nifty and Sensex. I think the fundamental challenge right now is that RBI has very limited policy headroom, and I think that's causing a lot of challenges. I think the currency weakness and some of the recent strengthening in oil prices, I think adds pressures on imported inflation. So at this point in time, I have to say I used to be a little bit more optimistic, but at this point, I think one needs to be defensively positioned in India.
Neeraj, what is your understanding? Do you think we have a trading bottom in place, or we are clearly not out of the woods?
Yeah, good evening. Actually, definitely there's a lot of confusion because the kind of fall we've seen, there's no light that you can see at the end of the tunnel even now. But definitely the kind of fall in selective stock has been tremendous. So from these levels, even these kind of extreme valuations don't last for a very long time. So I think if one can identify a set of stocks which are really beaten down a lot, I think it makes sense to start investing in those stocks, because these valuations, though you've seen a price correction happening across the market, I think some time correction might happen based on the macro and the fundamentals which we are facing right now. So those headwinds are still there, so some time correction might happen. So if you are someone who can buy and hold on for some time, there are some extreme valuations which are there which you can put your money in.
Sandeep, hi, evening. What's your sense on trade and which way are we likely to go after the sideways session today?
Good evening, Aisha. I think 56.60, 56.70 has not been conclusively broken, though on Friday it looked like it was about to, and we have again closed within that, and can't rule out a bounce back, only a bounce back till 57.40, 57.50. Only if it manages to close above 57.80 or so, I would talk of a move till 58.80, 58.90 or probably 5900, which I seriously doubt. So I think for the next 2 days, 3 days in this truncated week, we will have sharp movements within the 56.60 and 57.40, this 60-80 point range. And after that, possibly the direction is on the downside. I mean, sooner than later, I expect 5500. Now, it may not happen this week. Probably it may happen next week. But the direction is down. And in this next 3-4 trading sessions, we may have stocks moving both ways, up as well as down.
Let's look at BHEL. The stock today collapsed, down 20%. They came out with poor set of numbers. Profits are down. Margins are down from double digit to single digit. Sales also have taken a knock. And the only thing which has gone up for BHEL for the quarter gone by is other income. And the other income is largely fueled because of a weak rupee. Neeraj, BHEL today took a knock of 20%. It closed at 120 rupees. Given the kind of numbers they've reported and the sector it represents, do you think BHEL soon could be a two-digit stock?
Actually, BHEL is definitely in a very difficult sector, like you rightly said. And quarter on quarter, you've been seeing disappointment and disappointment. So it can carry on coming down for some more time. And I don't advise someone to do bottom fishing here, because the stock has been disappointing. So I think let's wait and see where it makes a bottom, and in case we see any recovery in the order flow, which is the most important thing with this kind of a company, till that time I don't think we should look at the stock.
Sunil, in the near term, the spaces which have held out have been the likes of IT, pharma and select FMCG. How long before you think we are, or rather these spaces are going to fall in line with the rest of the market? Or do you think this dichotomy that we're seeing right now is going to continue for some more time to come?
It's tempting to basically call for a rotation away from the defensives that have done well and look kind of expensive on the face of it. I will take an example from China where we've had a similar issue, similar, not the same, of an economy undergoing a period of slowdown, and a lot of defensive stocks continued to do very well, and there was a temptation to call for a rotation. That kind of never happened. And I think at this point in time, investors are likely to look for visibility of growth rather than getting too fixated on valuation. So unless we see real opportunities in earnings turnaround, real visibility, I think one should continue the defensive bias to a portfolio in India.
Sandeep, today we did see a big reversal in some expensive FMCG names. Nestle, Glaxo Consumer, Page Industries, Asian Paints. Would you consider today's price action in FMCG and consumer names as a good entry point to get in, or now these stocks are looking toppy and they have a near-term top in place?
Well, it depends, Nikunj, on what time horizon you are looking at. Asian Paints, we had a sell today, and I expect some more downside, and so in most of the stocks that you mentioned, but that would be a trading sell. So yes, if you are looking at the next 3 to 6 months time horizon at maybe 5, 7, 8, 10% down, I would look at an entry based on that. But in FNO, you can't trade them. I mean, they can still go a little lower. In that sense, I'm not convinced. But yes, as an investor with a 3 to 6 month or a position trader, I will look at buying these stocks selectively.
But Sunil, just want to get your views as well now that we are chatting about markets, because Unilever has been one stock which has been trading at a PE multiple of 40 times, and the company is only poised to grow at about 13 to 14%. Where is the margin safety then in such a case?
So, look, without getting into specific names, Nikunj, I think the point I would make here is that the growth certainty or visibility on certain companies like the one you mentioned is probably a lot higher than many other companies. So I think it is the certainty. So when you talk about margin of safety, I think that comes from the visibility of growth as opposed to a lack of it. So yes, there will be a lot of commodity related and deep cyclicals which look very cheap, but can you be certain of the earnings? So the margin of safety is not just a valuation concept. I think it's also a question about, do you have confidence in the earnings?
Right. Neeraj, at the current juncture, where are you treasure hunting in the infra or in the banking space? Valuations have come off quite a bit. Is it time to treasure hunt in some of those beaten down pockets?
I think slowly, yes, because we saw a good crack in the markets last week. So some of the lows or immediate lows which get made, they can be bought into. Like one, of course, was L&T has corrected almost 20%, from its post-bonus price of 1,000 plus. And, the results are already out and the orders, their flow was not that bad. So that is one stock where I think, because large cap stocks is the one where you can put your money, because again, you don't have so much uncertainty about the other small companies, the kind of earnings they're reporting and the sustainability of those earnings. Like L&T I mentioned from this space, and ICICI Bank, which came out with the results, also been a decent set of results, and they have been for the last 5-6 quarters been reporting decent set of results. So with this correction, I think that is one which can be looked at. But again, I'll say that you need to put in a small amount of money on all dips. You can't put in the full amount of money right now, because definitely the future in the immediate next 2 to 3 months looks little uncertain. So you need to be prepared to hold on for a little longer time.
Sandeep, the mid-cap end of the market held out, and it was interesting to see there was the beaten down names which saw some pullback coming in today, the likes of a JP Power, PFC, or for that matter an IRB infrastructure as well. Any buying opportunity, or is this just a dead cat bounce?
Aisha, good buying has been witnessed in some of these stocks, PFC, to name a few, or REC. A good trading opportunity is what I would say. A very clear 7-8% trading upside is what I see in some of these stocks, including a PFC, REC. In fact, we had a buy in the last 1 hour or so for the next day or two. So yes, a very clear trading bounce, and which may probably last for more than what we are thinking as of now.
Sunil, what about banks though? I mean, is it too late to sell the pack? Because with the exception of HDFC Bank, most of the banks